Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. If you pick up that phone and dial right now, you can leave me a message. I'm on air, so I won't be able to get to it right away. But I'd like you to call because the questions that you're going to have, the questions that you currently have, or why you listen to the show, there are all these needs you have. Either you're going to buy a house, you're going to refinance a house, you want to move, you have in-laws that want to move, you have friends that are giving you advice, and you're not quite sure whether it's true or not. These are the times and questions you need to make sure that you call and ask. Why? Because we do have the answers, and part of what we bring to you on this show is precisely that. We have guests, 3 guests a week that come on for the hour, and aside from that, I've been in the business 25 years. I had a business before that. I will probably have a business after that. So I'm a vested guy in business, in the smarts that it takes to do a job, plus in the mortgage business, that things constantly have been changing since 2007, and everybody knows what happened then, the changes that have taken place, that are continuing to take place, and in our political environment today, yes, they are continuing to change. I read a couple things today. It was really interesting. It was about Fannie Mae and Freddie Mac. As you all know, Fannie Mae and Freddie Mac are the conventional buyers of all loans made in America, meaning that if you get a 30-year fixed rate loan, or if you get other types of conforming loans that are qualified mortgages, those are sold to those big entities, and those big entities are trying to get out of federal conservatorship. Now, what does that mean? So in 2007, when they were, $180 billion in debt, the federal government came in and said, okay, we'll lend you the money, which really meant that they'd print the money. They don't have the money to lend. They just print more money. So they printed the money. They lend it out to Freddie and Fannie to stay solvent. But in return for that, they received shares, a certain type of share, but really ownership over those particular entities. And over the last 10, 11 years, Fannie and Freddie have been trying to figure out a way to get out of this conservatorship model so that they can run their businesses as they used to do as private entities. So this is what's happening. In the next 2 or 3 years, this is what's going to happen. The Fed has been, not the Fed, but the Treasury has been sweeping the profits of Fannie and Freddie into the Treasury for years, really, and they've made billions of dollars, on that investment. That $168 billion has been paid back many years ago, and every quarter they sweep in $4 to $5 billion per, and that's a nice little, way to do business, I guess. But they're going to get back out. They're going to have their own companies again, and it's going to be, as I said, between 2020 and 2023. And when they come out, which is really interesting, they will begin to set their own course as they used to do, as in the private market was intending them to do. And that's very interesting bit of news. So if you have news in your world, right? I mean, what we're looking at right now is a terrific economy. We're looking at jobs being plentiful. We're looking at people making more money. We're looking at housing prices remaining steady. I read 2 articles this week, very interesting. In the Inland Empire, we have multiple offers going on a lot of different properties, but at less of a rate than they were a year ago. Now, why is that? I don't know why. It's a very confounding market. But we do have fewer houses than there were 6 months ago on the market, but we have also fewer bidders. Now, that doesn't mean that we have less or fewer buyers. And so the oddity of this market, as it is confounding to me, why interest rates went up last week, and I want to touch on that. What is happening out there? What is going on? And I want to hear from you. So if you want to email me, info@malibufunding.net, you can certainly call me. I've given you the phone number. My blog is bartonblog.com or .net, either one. And, we're on YouTube. If you want to try to send me a message through YouTube, you can do that. Malibu Funding, which is the company that sponsors the show, they have a website, is malibufunding.net. All these different ways. social media, telephone call, old school. You can always mail to us, too, although nobody mails anymore. I did get a nice note from a client who said that they really appreciated one of the loan officers that worked for Malibu Funding. Her name is Maggie Miller. She worked and still works in California, Simi Valley person. And it was this extensive, long, very nice letter. It was probably a page and a half, 2 pages long. Now, that is something, to do that for somebody, to write a letter. So I really appreciate that coming in the door. Okay, let's talk a little about the rates. Why the rates going up? First and foremost, 30-year fixed rate loan, 3.875 to 4.0%. Now, there were some guesses as to why the rates go up. But quite frankly, we don't know why the rates go up a lot of times in the mortgage business. Now, I'm sure economists will tell you why. They will say that it's because the China and U.S. trade talks have gotten more interesting, i.e. closer to some end game here, whereby there will be either a first phase agreement or some lessening of the tariffs on billions of dollars worth of goods. This is all what's happening. And by the way, I think it's a interesting time that we live in, whereby we have one segment of the population so wrapped up in impeaching the president, yet the president is really dictating what's happening in the Chinese and U.S. trade talks. So if, in fact, we're going to have less tariffs on Chinese goods, isn't this good for business? And is it really unthinkable to believe that President Trump probably get elected again just because he's able to really have an effect on the economic life of so many people, and because the economy is doing so well? It's just the way things are running right now in the U.S. When it comes to, just the political events, the economic events, all seems to be executive branch centered. And for you and me, if Jerome Powell decides to lower the Fed rate one more time, we could have an even larger expansion. We're at about 2% GDP this year. We were at 3.25% last year because of the tax rate, the tax cuts. So all these things are very, very interesting about what's going on. Now, the effect on the mortgage interest rates, as I said, the 30-year fixed rate at 3.875 to 4.0%. Now, that's up, right? I mean, last week, I think we talked on the show, was 3.625%, and maybe it was 4.5 weeks ago, it was 4.25 to 4.5%. Now, because of the trade issue and because they are linking the possibility of lessening of tariffs or duties on imported or exported goods, that has a reverse effect on the mortgage rate, i.e. less tariffs, higher rates. Why does that happen like that? I don't know. And I have read that is what's happening, but I really don't know why. And if you could explain it to me, give me a call. Email me. Do whatever you can to try to educate us here, because as we try to look towards how much your money can go out there in the marketplace and buy a house, we want to make sure that that is steady and that the rate you get today is the rate that you can lock in when you get all your docs in. Otherwise, you have to rate lock really quickly. If we're looking at 4%, when we had 3 definite Fed rate cuts, when we had Fed rate cuts, it was about 4.5%. But as this particular market goes and the mortgage interest rates are trending back up, even with these Fed rate cuts, and again, the Fed rate cut has zero to do with the mortgage interest rates. However, they are, they've got some what is that word? Symbiosis?
Symbiosis.
Yes, symbiosis. There is some corollary between the two. And I think that in trying to figure it out, the best thing to do is to look at what you can afford each and every month. Find a property out there that you want to buy. Make that down payment so that your rate can be whatever you want it to be, and go out there and get it. We're looking at rise in real estate prices this year, again, probably in the 3 to 5% rate, which is definitely sustainable through the next decade. And when Jerome Powell said today that he saw no headwinds in the economic future of the U.S., that is quite a bit different tune than he was singing 6 weeks ago, when he thought that what we were looking at, unless we cut interest rates, was a downturn in the economy. It's not. It isn't. And I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. Thanks for tuning in. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. Pick up the phone. Give me a call, leave a message so that I can get back to you. I have a lot of answers. A lot of great guests come on the show with better answers. And what we try to do each and every week, as you well know out there who have been listening to the show, and I really appreciate that. The show is doing very well. We're in, what episode are we now?
This is show number 190 for you and I together, but the show pre-existed our
right. It's 190 shows, so that's just through this particular channel. Anyway, I'm very grateful for the longevity and what we're doing and how people are responding. If you need help in the mortgage industry, if you need help figuring out a loan, we're the people to call. 888-713-2929. We do bring guests to the show, about 3 a week. One of the guys that I've asked to come on the show has not been on the show before, but I'm grateful that he has come on. Adam Patuffy, right? Is that right?
You
Adam?
got it.
Jeez, I'm sorry. No, I was explaining to Adam that I've butchered names in the past, but I got this one right. Anyway, he's from Finance of America. A lot of what he does is in the reverse mortgage field. Now, we've had some reverse mortgage people on before, but not from Finance of America. And so I wanted to have him on, explain what the product is, some of the benefits of what that product can do for people. And Adam, thank you very much for coming on the show.
You're most welcome. Thanks for having me.
Okay, very good. Quickly, go over what you all do with reverse products and how that might be able to potentially help some of the people in our listening audience either buy a house or refinance, especially if they're on a fixed income.
First and foremost, we specialize in reverse mortgages only. So we don't do forward loans, we don't do rehab, we don't do anything but reverse mortgages. The company's been in existence since 2006. Formerly under Urban Financial Group, and slowly evolved through mergers and acquisitions. We are now Finance America Reverse, actually a sister company of Finance America Mortgage. So I'm an account rep on the wholesale side of the business, where I live and breathe reverse mortgages, which in a sense is a loan that allows a homeowner who has equity in their house to tap into some of that equity, be it for living expenses, fun expenses, vacations, whatever. As of late, we've had a jumbo reverse mortgage product. Actually for about 4, probably going on 5 years. But as of late, it's really picked up traction where we made the product desirable. And California is the number one state where most of these, as you can imagine, transactions happen. They're both refi and purchase. Someone can buy a house with a purchase. Say it's just to give some rough numbers. They're buying a $2 million property. They're 82, let's call it. We would bring, say, roughly $1 million to the table, and the buyer would bring roughly $1 million to the table to equal that purchase price of $2,000. So the benefit there is now they bought the price for half the price, really, and now they live in the house without ever making a mortgage payment. That's essentially a reverse purchase transaction in a nutshell.
Adam, when you make these kind of, it sounds like a great deal. What kind of qualifications does the buyer need, or the retired person? I guess this would be a retired person, right? Somebody
Correct.
62 and above?
For borrowers age 60 and older.
Okay.
The qualifications are as follows. So for one borrower, the residual income requirement is just $589. For 2 borrowers, it's $998. And how residual income is calculated, simply take borrower's gross income, subtract property taxes, homeowner insurance, credit accounts, utilities. And we need to be left with at least that, say, $998 for 2 people. Now, where someone fails that residual income requirement, it doesn't mean they don't qualify for the loan. It's simply that now we have to create a life expectancy set aside for property charges. So in other words, an escrow account that we hold back so we can make the payments on the borrower's behalf because they failed the income portion, or perhaps credit portion. There's not necessarily a minimum credit requirement, But we do look back, especially in the last 24 months, property taxes, homeowner insurance, mortgage payments, most importantly. And if there are late without any extenuating circumstance, without any catastrophic events that potentially put the borrower or pinch the pennies to where they couldn't make a payment, without a good excuse, if you will, a life expectancy set aside for the property charges is simply required.
Okay, so it doesn't sound all that difficult, although I'm a little sketchy on the amount of money you have to bring in on each particular deal. How much does your property have to be worth? Or if you're refinancing in order to get a reverse mortgage, how much equity do you still have to have in your property?
Generally speaking, at least about 50% equity is needed. So,
okay.
And home values, we do anywhere from, say, 50 grand to 10 million. Our lending limit on the jumbo is $4 million. So that's where we cap it at.
I see. So basically what you're saying, obviously, is that 50% down, some residual income, credit score that shows the last 24 months of pretty good revolving credit, i.e. that you're paying your bills, and you should qualify if you've got the age of 60 years old.
That is correct. An age of 60-year-old is actually a new endeavor for us as of about last week.
Right.
Usually 62.
Yeah, that's what I thought.
Most of the industry veterans know. But 60 is allowed on our proprietary HomeSafe product, effective like Monday or Friday of last week, I believe.
Excellent. Explain the HomeSafe program. Is that what we've just been talking about?
Yeah, that's it. So basically for values over about $700,000, and there's not a definitive breaking point, but ultimately we look at values at about 700, both the FHA product and the HomeSafe is to be considered, because at about 700,000, they both yield roughly the same LTV and roughly make similar sense to the borrower. Now, for anything over, say, $1 million, $2 million, 3, 4, 10, very quickly is HomeSafe, the jumbo proprietary of product, is the answer.
Okay. What do you like about doing business? Is it because the product is a little bit of a niche, or is it about helping older people to obviously secure their retirement? What attracted you to this end of the business?
You know, that's a very good question. I started in the industry. I'm a young guy. I'm only 32. I started in the industry 10 years ago at 22, basically right out of college, as a processor. Then I slowly moved to different departments, and then I originated. I originated for the company for 3 years, 2 of which I was the top producer. I loved the business then. I love the business now.
Mm-hmm.
The heart has always been to, because I believe in the product so much, and there's just so much misconceptions.
Yep,
so
there
much
is.
Just bad stigma around this product that I feel as if it's my life's purpose in some way to communicate a clearer message. I'm not saying reverse mortgage is the solution for everybody, but it's certainly one that's very much a make-sense solution for most borrowers, especially, those are on fixed incomes where, their life dreams aren't coming true because they don't have the ability to pay for some of those expenses. So I absolutely believe in this product, and I see myself retiring in this industry as well as getting a reverse mortgage.
Right. No, that's very funny. And it's interesting that you got into the business young, but with this product have grown into, now you're an account executive helping companies like Malibu Funding get in and do well in the product. I always wonder why people do certain things and how it comes up in the lending business. Obviously, in this particular case, to be able to help people, to be able to understand that, by tapping into the equity that there is in the house, people can live a lifestyle that they may have only dreamed about, or that they want to stay in the house, but they also want to, tap into the equity. All these things combined make it for a very rewarding life, rewarding career, I bet.
I agree, 1,000%. I mean, that's been my experience, Jeff.
Hey, listen, Adam, thank you very much for coming on the show. I really appreciate it. That's a quick 10 minutes. I want to have you back and give us an update as to what's going on later on, especially if they're going to change anything in the program. As you know, reverse changes all the time. But thanks for coming on the show.
My pleasure. Thanks for having me.
Thank you very much, Adam. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is our telephone number. We do have an email address, info@malibufunding.net, as well as we have a Twitter account at Jeff6493. We're on YouTube. I've got a blog, blah, blah. We got all that stuff happening. Communication-wise, we try to stay on top of what's going on out there, but really it's about reaching you, the listener, to try to, get us questions so that we can help you either decide to buy, to sell, what kind of loan you're going to get, all things that are very, very important to you, especially if you're starting a family or you're retiring, you're getting out of your home. There's all the questions in between as to what's going on in every market, and every market is different. But there's one universal thing currently in this market, and it has really been going on, I would say, for the last 5 to 10 years. As the market got better and better and better, and more people wanted to buy houses, the prices went up. So what happens when supply and demand equal higher cost is that people are looking for solutions to figure out what the heck is happening and how we can solve the problem. So I asked my friend and also city council person in the city of Malibu to come on the show and really just discuss what is happening in terms of solutions at the small city level. It's Mikey Pearson. And Mikey, thanks for coming on the show.
My pleasure, Jeff. Always good to join you here on the show.
Yeah, no, thanks very much. You know what's going on out there in terms of housing. I know LA has come up with some solutions, i.e. the granny unit or whatever, and I don't know what solutions there are out there affordability-wise. What are, in your discussions with other people around the country who are in similar situations, especially officialdom from those cities, what's the buzz or what's going on in terms of solutions or problem solving for this particular issue?
Yeah, it's a difficult issue, and absolutely every other city I talk to is going through some version. We're all pretty much in the same boat together. Housing is definitely a big issue, and obviously if you read the newspapers or watch the news, you see that our governor is making some big moves on it involving, ADUs, rent control, landlords not being allowed to kick people out, etc. So there's definitely a lot going on. I think on the ground floor, what we're seeing right now is going to be a big change coming up with the new ADU law, and that's going to be very interesting. I'm not sure what the overall impact of Malibu will be, but I do know a number of people are looking at putting in ADUs where previously I don't think they were thinking about it as much. 60 days maximum wait time to get the permit. All sorts of normal development standards are put aside, and it really becomes easier to put in that accessory dwelling unit, and you really can use it as a rental or as a green flat, any way you want to. So that's a big change right there.
Yeah, I think adding, how do you look at it as a city? Are you looking at it, okay, let's say there's X amount of people that need housing, let's find them bedrooms, or are you looking to have people have home ownership and investment in the city that they're a part of? How do you look at it philosophically and then practically?
Well, I think as a city, you look at how we're going to expedite it and
right.
make it happen, and what exactly is that. From the homeowner side, I think in Malibu, we're mostly looking at people adding an ADU. Probably, I'm going to guess most are going to be for their own use. I'm sure some of them are going to rent them. A little hard to tell at this point. I think we're also in an era where so many people in Malibu are older and their kids have moved out. Right. And a lot of those kids are moving back home. So I'm thinking an ADU might be more popular for putting kids in than maybe previously. And so that's part of it, too.
Okay. The affordability issue. Now, it's happened everywhere. This show is heard in several counties as well as many cities in the Inland Empire and certainly up in Tahoe, trying to figure out how to get a handle on cost of buying a single family home. Does a city have anything but, just they sit back and watch it happen, or like what you were saying about the governor and whether it's making sure that rent control is in place, and I'm not a big proponent of that, but I understand the sentiment and why. What are your thoughts on that?
Well, we don't really have rent control in Malibu at this point. So Malibu's a little unique, and with the governor basically forcing cities to build affordable housing, it'll be interesting to see how that impacts Malibu down the line. At this point, I don't see a lot of changes. There are some projects I want to bring forward, such as low-income housing, not homeless housing, nothing like that. But I do think in Malibu there is a need for affordable housing for people that work here,
right.
Such as first responders, school teachers, people that work in our businesses. It's very, very hard to find somebody to work in your business in Malibu. So I myself and the mayor are working on that. It's a difficult project in Malibu, but we would like to get an affordable housing project in Malibu, probably down in the Civic Center area.
Okay.
And we'll see what kind of traction we can get on that. And I think, too, the other thing is, let's not forget Malibu just over a year ago went through our worst natural disaster ever.
Yep.
And we lost 488 homes, and fortunately, even though your home, Jeff, was right in the hot seat where homes burned, yours survived. So I'm very glad about that.
Yours too.
But,
yep.
Yeah, ours too.
Yours too.
But it did bring up, it did surface sort of a lot of issues, such as what amount of the inventory are short-term rentals taking, and that's probably the one that got pushed to the front, particularly after the fire. After the fire, we ended up passing an anti-gouging ordinance. We followed the state's ordinance on that because certainly there was a bit of that going on. I know some people were prosecuted, but I never really heard the details.
Oh, really? I didn't know it. I didn't know that happened.
Yeah, it was pretty quiet. I'm sure most of them just settled. I really was not informed of the outcome on that. But beyond that, I think the debate became how many potentially rentable units to people who live in the city are being used for short-term rentals. And I think the research shows it's a decent amount. It really is a decent amount. And particularly in some of the multi-tenant buildings, they felt they were being forced out because landlords could make more money in short-term rentals. So right. I think that issue, particularly in coastal cities, has really, really moved to the top of issues to figure out, and Malibu is working on figuring that out now at this point.
Is that like a vacation rental by owner, or any of these other number of short-term rentals, as you're calling them? I know some cities like Las Vegas have really outlawed them within the city limits. So I don't know if that's a solution for a city like Malibu, but...
Well, I think there's quite a few people in the city of Malibu that would love to outlaw them. But the Coastal Commission will not allow us, which is a very interesting situation. The Coastal Commission's probably primary focus is public access. So despite the fact that they're not an elected body, they seem to have the power to make decisions over our land use plan, our local implementation plan. So at this point, it does not look like we could ban them if we wanted to. What was brought forward recently is sort of a home sharing ordinance, sort of like Santa Monica did. Basically means you have to be on the property somewhere if you're going to do a short-term rental. And we'll see how the Coastal Commission treats that. We're a little uncertain, but that's what we're looking at the moment.
Okay, we got about a minute left. It seems most of these solutions are long-term, and that the people involved in it come and go. How does the city, or how would you think that the city or any city maintains momentum on a particular idea, especially with the turnover and the change in leadership?
Well, that's a really good question. I think one reason that our mayor, Karen Farrer, and myself have joined together on some of these issues. Because we were elected a year ago. So theoretically, we have 3 more years together, and if we run again, which I think we probably both would think of doing, we're going to be around for a total of 8 years because we recognize these issues are going to take a long time, and so it makes sense for us to team up to try and figure them out.
Yeah, no, I agree very much. Mikey, thank you very much for coming on the show, shedding a little light on some of the issues that you deal with in the city of Malibu, which really are reflected all over the state. Thanks again for coming on.
My pleasure, Jeff. Good talking with you.
Thank you, and that's Mikey Pearson, City Council person from the City of Malibu. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Our telephone number here. Pick up the phone. Leave us a message. Give us a call. We'll try to help you in your decision-making process, or just chat about what your options might be if you're out there right now trying to figure out if you can afford a home, where the home's going to be, and if you want to drive 4 hours to work every day because you can't afford the house that you want right next to where you work. I know the problem. We've tried to deal with it for forever, it seems, and we've been talking about it on the show. Affordable housing, affordable housing, affordable housing. Where is it? Where can I get it? And then, of course, everybody wants in on the most or the cheapest property in the best neighborhood. So, yes, I understand, and I really do feel for you. Okay, so several things going on in the marketplace that you may or may not know about. One, obviously, we just talked about it, lack of housing. Two, real estate prices aside, the mortgage interest rates are still really low. We went over the interest rates a little bit earlier in the show. We didn't get to the full gamut of them, so let's just run through it quickly. 30-year fixed-rate loans are about 3.875 to 4%. The FHA and the VA loans are 3.375. Great loan, by the way, that VA loan. Up to 3.5%. The 15-year fixed loan, 3.375% to 3.5%. Now, that's a great loan, too, especially if you can afford the increased payment. The rates are low, and you pay your house off in 15 years. And, of course, those ARM products, and I always push the ARM products for those people who move a lot. Those ARM products this year, or this week rather, 5-year ARM is 3.25% to 3.75%, and those are still smoking rates. So if you've got a need to move within the 2 to 3 year window or 3 to 5 year window of this particular product, it looks as if, and we've seen the economic outlook from a number of sources, but certainly Jerome Powell, he came out and said, look, the economy looks strong. I don't see any headwinds. We're looking at sustained growth. We're going to monitor what happens with the Fed interest rate, and but for now we're going to hold court. I know that the president wants him to drop rates even more to be more competitive. I think it's the fact that the tariffs against some of the U.S. products that China has obviously imposed and has been imposing is what's biting into the production or the productiveness of the particular segment of the market that could use another interest rate cut. But I don't think that should happen because the broader market says, no, we should hold interest rates the way they are. And I also think that we'll probably see a China deal before the end of the year, or certainly within the first quarter of the following year. Why? Because going into an election, any incumbent wants the economy to be singing, humming, so that they can get reelected. I think that's the bottom baseline issue for many, many people. Are you doing better today than you were 4 years ago? And the answer for many Americans is yes, we are. Although in talking to both Mikey off air, who is the city council person of Malibu, plus a lot of other guests and people I talk to, children, what are you doing about your children? Have they gotten jobs? Now, his particular child has gotten a good job and is making good money. My particular children, yes, they are not in the career or dream job of their choice, but they are working. Although I did have one of my sons get laid off last week, and that's always when you're working at the edges, and what I say about edges is new people in the door at any job are the first people to let go when the economy turns down. Now, certain industries are bulletproof in terms of recession. The healthcare industry certainly is one of them. I know many people in that particular business, and because baby boomers are huge in terms of the numbers over 60, 65 years old, and that particular population is the fastest growing population in America. So we had Adam on the show today to talk about reverse mortgages. Many people, as I said, 50% of the homes in America are paid off, and most of those people who have paid off homes are over 60, 65 years old. So tapping into the equity with a reverse mortgage is a way to get yourself through the retirement years, through those years whereby you're not making the kind of money that you were making. If you get a reverse mortgage, as everyone knows, you certainly can pay it off like a forward mortgage. Reverse forward, what does it mean? You borrow the money, forward loan, you have to pay it back. Reverse loan product, you don't have to pay it back. But you can pay it back. You can make the regular payments. You just don't have to. And on a fixed income, somebody who has medical bills, somebody who has unexpected expenses or wants to take that vacation, buy that car, or spend some money on the kids or grandkids in furthering their education so that they can do better in life, yes, you don't have to make that payment, and you have the money available to do so because you now have a reverse mortgage that you don't have to pay off, and usually you get a cash out from that, especially if you own your own home. So all of these things going on in the mortgage marketplace, it's a very interesting time. Ran across an article a couple days ago, and it talked about the return of investment in cities in America. And what do I mean by that? Okay, if you bought a home in Southern California, as I did, and I talked about it earlier, or I will talk about it in another segment of the show, if you bought a home, when I bought a home, in the city that I live in, back when I bought it, your return on investment has easily 5-6-fold since that time. Now, it's taken 25 years to get there, but so there is a list out, and it came out, and it's in one of the websites that I look for information for the show, and I found it very interesting, the different cities around the country where if you buy something today, what it's going to be worth tomorrow, and what kind of return of investment that might be, and how many of these cities would you want to live in anyway, but it's interesting. So I'm going to bring Daryl in here to play Guess That City, So, yeah, I buy a home in any city in America. A year from now, which of the cities is going to return the most, i.e. the property is going to be worth more than it is in any other city in terms of percentages?
Well, I would say it's probably some area where growth is taking place and business and industry are expanding. I'd say North or South Carolina is on the list.
Let's see. Charlotte is number 3 on the list. That's very good. Charlotte, North Carolina, which is a tremendous. I have my niece lives down there. I love it down there.
Yeah, it's pretty.
Really pretty. Although I saw that recently they've had a bunch of storms there. And by the way, did you see what's going on in Venice?
Oh yeah, it's horrible.
In Italy?
Yeah,
it's unbelievable. I mean, half the city's underwater.
Yeah.
And no global warming here.
That's the sewer and everything else.
That's
too.
everything.
Yeah.
I mean, that city will never recover. They were talking about some of those buildings that have been around since the beginning of time are now lost forever because they just never are going to recover from the water that is now 4, 5, and 6 feet deep in some of these houses.
Well, the historic buildings are sandstone, too. I mean, it's just,
so they're definitely going to just,
gone.
It's horrible. So anyway, back to the list. Charlotte is number 3 on the list. Give us another city.
I would say that New York City is still probably one of those places.
New York City is 10th on the list. 10th. Very good, but still 10th
it's on the list.
It's on the list, exactly.
I knew someone that recently rented a chair.
Come on.
No, that's true. You think I'm kidding. You've heard about couch surfing and all of that?
No, I have.
They rented a chair
and what did it cost
Manhattan.
Them? Really?
And it was like $500 a month where they could come into this home and they could sit in that chair.
That's funny. Did they have bathroom access or was that extra? Quarters in the door?
I didn't get it to that level of detail.
Okay, so you hit 2 on the list. There are a number of other cities that are interesting, but basically a lot of the cities that you'd think would be on this list. A lot in California.
Yeah.
Yep.
California. Let's try Palm Springs.
Nope. The one in California that jumps is Los Angeles. Los Angeles
covers a lot of
I mean, that's 1,000 square miles, right?
Compton to Beverly Hills.
Yes, exactly right. But if you do buy a house today, in a year from now, you're going to have a pretty sound and good investment. Why? Because the prices are going to go up, and it's like 7th on the list.
Yeah.
So,
well, I mean, they can't go any lower, really.
No, I mean, what we're looking at in terms of what not only the predictions locally but nationally is the economy's good. people are working, and the housing is really not rising too fast, so that the affordability index, because of the low interest rates, is still pretty good.
It's never going to be less than zero.
No, not at all. No, that's a good point. Let's see. Just to top off the top three on the list: Las Vegas, Nevada, that's one, and Denver, Colorado, which is one I had not really anticipated. Tampa, Florida, Portland, Miami, San Diego, Los Angeles, Chicago, Boston, a lot of the big cities.
Yeah,
because the demand is always there, and obviously, if you buy now and the demand is still there, the prices are going to go up because it's a real good place to live in all these cities. Thanks for jumping in, Darryl. I really appreciate it. Thanks, everybody, for listening. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Our telephone number over here to leave me a voicemail is 888-713-2929. And I shout out that phone number so many times during the show. I just want you to memorize it and write down those questions when and if you have them, whether it's during the show or whether it's after the show. We are always here, and we love the feedback. We love the fact that people are listening and they get involved with the show with either questions, comments, or once in a while, a nice note or email, something like that. Anyway, I'm Jeff Barton. We're on YouTube. If you go to YouTube, our channel is Jeff Barton, the Mortgage Voice. We've got this show and many other shows on there. If you want or see or have heard somebody on the show that you want to make sure you get in touch with, you can go there always. The shows are archived, and we'll probably have next week's show up probably every Saturday. Is that right? We get the shows up?
No later than Monday night.
Okay, very good. So if you do hear something you like, and I hope you do, from one of the guests, and most of these guests, they all come on for free. They all want to inform and help. Obviously, they're pitching their particular company or their particular services, but it's really about informing and helping people out there to make decisions buying and selling property. It's that simple. The show is about information that you can use, and usually it's about rates or programs from the lending side. From the real estate side, it's about solving problems, and it's about many, many things. I wanted to talk just a second about what a house is and why I'm doing that. It'll become evidently clear. So, Darryl, what when you think of somebody buying a house, what are they buying, essentially?
Well, they're buying a future. I mean, first of all, when you buy a house, that's one thing that you think ahead. What's your life going to be like 5 years from now? What's your life going to be 10 years from now? So actually buying a house is predicting the future of you and your family.
That's right. You are not buying, because the reality of what it is, a house, it's stick of wood in between a couple of plywood pieces, and there's a floor, and when you come right down to it, it's just a bunch of pile of wood, a couple of windows, and some electrical and plumbing. There's not a lot to it. You're buying some future idea of what home is, right?
In Southern California, we call it firewood.
Exactly right, which we're in fire season right now, so... But so the reason I bring that up is because I'm traveling around my neighborhood, and maybe you're out there and you're traveling around in Riverside or San Bernardino counties, and you're looking at houses that you want to buy, and you're saying to yourself, boy, this is $500,000-$600,000 or $300,000-$400,000. How does a house get to be that particular price when we all know that you could tear down any house and just add up the cost of the wood, the nails, and whatever else is the actual physical components of the house, and it comes nowhere near the price that people are asking. And they say, well, it's supply and demand. This is a great neighborhood. The schools are terrific, and blah, 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 blah. But for you to understand what you're buying is really the future of how you see your life going to develop. If you can afford that future, then this is a terrific place for you to live in and to buy. And if you can't, then it isn't. Now, we all try to find in our neighborhoods, in our towns, in our cities, or wherever we're looking to buy, that nugget, that specifically rat house that is in the best neighborhood, that you can put a few bucks in and all of a sudden you've got, a masterpiece, a palace, something that you can be proud of. Not only that, but it rises very quickly in value. We're all looking for that, and it is market dependent as to whether you can get it today. For instance, if you bought a house where I live, now everybody knows that I live in Malibu, California, i.e. hence the name Malibu Funding. That's the name of the company that I work for. They sponsor the show. They pay me. I really appreciate what they do. But I live in that town. Now, when I got there, and you're going to find this hard to believe, it wasn't that long ago. It was in 1995, and 95, 05, 15. So it's 24 years ago. That's a generation. So if you're a young couple or you're a young person or you're just somebody looking for a house, you want to find what I found in 1995. Went out to the city of Malibu, and it was still, and most of Southern California are World War II houses, built really single-family ranch-style homes that in the 50s went for $30,000, $40,000. Now, in certain segments, especially in a place like Malibu, but also out in the IE, houses that went for that then are now going, 6, 7, 10 times that, maybe more. So my house, back in the day, went for a cool $500,000. But in my town, there were houses going for $250,000, $300,000. Now this, you may seem to not believe, because those same houses, as my house, has gone up in value 5 times. Easy, maybe 10 times on some of these houses. But at the time, they were terrific buys. So what does that say about the house that you live in, or the place that you want to live, or where you want to go out there and purchase something? It's saying that if you look at your house or the price or whatever it is that they're asking today and project into the future, while you can maintain this idea that home is really something that is more than just a pile of wood, sticks, nails, windows. It's more than just the cost of what it is to build. You're going to appreciate the fact that you live and are either raising a family or you're living for, the next 20, 25 years, while you afford that mortgage, that monthly mortgage payment. And at that time, the prices that you see today are going to seem like such a bargain. As I'm evident, I know 25 years ago, the house that I bought was $500,000. Well, it's worth $3.5 million today. Why? I didn't do anything. And that's the way you have to look at properties. Can you afford it? It may seem like a ton of dough, but look at the monthly and say, can I afford this? And can I enjoy the dream of home ownership while I either raise my family or enjoy the lifestyle, or however it is that you define that? Because that's the key here, is not to focus on so much of the huge amount of money you're going to pay. Because believe me, in 1995, $500,000 to me was a ton of dough, and I really couldn't afford it. We borrowed the $100,000 for the down payment, and were able to make the $400,000 a month at 8.5% interest, mind you. That was the going interest rate back in 1995. Look it up. So home ownership is a great thing. Enjoying your home is a great thing. The cool thing is, after all that time, my house is paid off. And all of that equity that has been built up over time, the money that I've spent, sweated, and worked at, now becomes either a legacy, a gift for my kids when I pass on, or a way by which I can enjoy the remainder years in my life when I retire. And whenever that is, I don't know. But that's the key to home ownership, and that most people in the U.S. who own a home, this is the 50% of the homes in the U.S. are paid off. Now, this tells you that the dream is not only shared by me, but by millions and millions of people out there who look to their home to be something that they enjoy, that they are able to pass on, perhaps. They're able to use as retirement money when they actually retire. But if you can afford that particular down payment or the particular mortgage monthly payment, which I think there are still many opportunities in the real estate market for that kind of purchase. And if you're out there right now and you're listening to the show thinking, oh my, how am I going to afford this? Or why, can I get a bigger down payment? The cool thing about this market, and I appreciate our guests coming on talking about programs about trying to get more and more people qualified for loans, is that there are many aspects to the loan business which did not exist 25 years ago. There was no such thing as non-QM. There were other types of products, but these types of products can help you. mortgage interest rates are still below 4%, which was, less than half of what I paid when I had my first mortgage at 8.75%. So there are opportunities for you out there, and you can get into the market. Getting into the market, paying your mortgage monthly, and then watch over the years as you both enjoy your house and watch the equity build. This is the way we do it. This is the way it's done with most people, and this is how I would say 80-90% of baby boomers are going to live in their retirement years, which is what you can do too, is Gen X, Gen Y, or millennials. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening this week and every week to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.